In this AIMT Insight, I'll be discussing what impact the geopolitical tensions around Ukraine and the Russian military invasion threat might mean for metals markets and metals prices. So the background to this is Russia's obviously been building up its military forces. It now has in excess of 100,000 troops and equipment in the regions surrounding Ukraine or in the border areas around Ukraine. US and allies in Europe and NATO are very fearful of a Russian invasion, particularly at some point in February. And in response, they've been threatening Russia with a range of strong sanctions. The details haven't been made completely clear, but they could include measures such as cutting Russia off from the SWIFT global payment system, restricting the country's access to the US dollar, perhaps, and blocking the approval of the Nord Stream 2 pipeline is something else that's been mentioned. So the sides currently remain in dialogue for now, but tensions are still running very high. Now, what's the potential impact on metals markets? Well, the first is that sanctions could hit Russian supply of metal. So firstly, we see that Russia's domestic production of base metals, particularly for aluminium, nickel and copper, is pretty significant in terms of the global share. So that's probably the first concern, is that it is a significant supplier, and if its domestic production is hit by sanctions, then that could have a broader impact. I think more specifically and acutely, European dependence on imports of these metals is also particularly high. So you look at aluminium as an example, the primary aluminium, almost a quarter of the EU and the UK supply comes from Russia based on 2020 trade figures. Now, it's probably unlikely we see a complete disruption to supply from Russia. I think policymakers in Europe will want to avoid a repeat of the sanctions on Rusal and EM Plus that we saw in 2018. And at that time, you saw really it was the aluminium consumers in Europe that were probably hit hardest by these sanctions because of the resultant increase in prices and premiums. However, I think some impact to trade is probably inevitable if state-linked metals producers in Russia are hit by these broader financial and economic sanctions in the event of a Russian invasion. And I think with European metal markets being tight, potentially much tighter than they were in 2018, with very low European inventory, the exposure or vulnerability to supply, that kind of supply disruption, is relatively significant at the moment. Now, the other key risk to metals markets, and I think which is probably more specific to aluminium and zinc, is that European energy supply is still very dependent on Russian flow of natural gas. So around 44% of Europe's natural gas imports are from Russia, and around 30% of its natural gas consumption is from those Russian imports. So Russia had already been restricting supply during Q4, and that had kind of been perceived as a way of trying to accelerate approval of the Nord Stream 2 pipeline. But you can see kind of over the last few months that the European zinc and aluminium producers have been particularly exposed to these higher European energy prices. And a further spike in power prices, if natural gas flows from Russia were to be restricted, could trigger further production cuts and a resultant increase in prices. However, I think high energy prices, I guess, as a downside risk, would also probably result in worsening inflationary pressures in Europe, which could, of course, undermine underlying economic growth. So that's a potential longer-term downside risk if this was to escalate. The third area where I think metals markets could be impacted, perhaps again, this perhaps a bit less directly. So while the physical market implications of the sanctions are quite bullish, I think the financial implications could be a bit of a counterweight. So I think that particular case for metals that are less exposed to the supply and energy issues that I've discussed just before. So that can include lead and tin, for example. So a Russian military escalation would likely drive pretty significant risk-off investor behaviour across financial markets. Obviously, European equities would probably be hit substantially harder than most other asset classes. But I think commodities are going to face a bit of a headwind from that knee-jerk reaction, because flows of capital are going to go into the US dollar and other safe havens. And I think a strong dollar is something that would weigh on commodities and metals more generally. So in summary, I think a Russian military invasion, it's not the base case, it's a tail risk, as I think a political solution or a Russian military action short of an incursion that would trigger sanctions is probably the most likely outcome. However, if we do see that happen, we do see sanctions being imposed, it'd be largely positive for base metals prices, I think, as the supply of metal and gas from Russia is quite vulnerable to these sanctions and counter-sanctions. Aluminium, as I mentioned, is probably most exposed because it could be impacted both by the hit to Russian supply and to the potential hit to European energy markets, followed by nickel and zinc, and then probably tin and lead. You're likely to see maybe a marginally negative impact because of this negative weight from financial markets and possibly higher inflation in Europe. So markets are already pricing in some of this risk, and I'd say if we do see a de-escalation of tensions, we're also probably likely to see the opposite of this effect. So maybe aluminium prices slipping a little bit, for example. So that's a summary of our views on this situation. If you are interested in the insights that we're putting out on a semi-regular basis, then again, I would encourage you to follow AMT on LinkedIn, and the details are above me there.